we've done like a lot about entries over the last couple of things. I don't know how many we've done, I can't actually remember. But yeah, I thought it would be good to do a Q&A about entries, like in case any of you lot haven't understood anything like that. Like, yeah, I thought that would be a better idea, really, to see what we still need to work on or whatever. So yeah, I think maybe the best way to do it is to do. Did you post the recent Zooms? Not yet, mate. No, you'll see them when they're posted, mate. But yeah, I think we should probably do the hands up thing because it will just keep it a bit easier. So I'm going to mute all of you, and yeah, fire away with any questions you guys have about entries. Stick your hand up, and then yeah, we can do that. Everyone knows how to raise their hand, I'm assuming. Okay, yeah. Cool. You should be able to ask to unmute, or you should be able to unmute yourself now.
Yep. Morning, everyone. Just wanted to kind of, if you can, we spoke about the bazillion times, but it's less about the entry, but I mean, it's about the flip itself. I think that I still don't see it really clearly, or maybe I do and I'm just like over doubting myself. So sometimes with the flip, I'm like, it's so somewhere still blurry for me.
Okay, so right, when we're looking at a flip, let's find a chart. Yeah, all right, let's go through the theory a little bit first, right? So where's my drawing? What we're seeing, right, is essentially whenever we see orders delivered to a market, right? They actually, let me get on a clean chart because otherwise I'm gonna fuck up. God. Right. When we're like looking at the theory of it, right, what we see is any range, right, is a stack of orders, right? Any range that does, like if a range does this, right, range is here, right, and then initiates out of the high, we know that that range was predominantly buy orders, right? So then what we see is price come back down into that range, right? And then absorb the resting buy orders in here, right? Because like when the only reason price moves is because there's an imbalance in supply and demand, right? So when price breaks the high of that range, is because more buy orders have been stacked there than sell orders, right? So when that happens, there's always going to be some leftover orders there, yeah? So we then see price come back down into that range, and this move up is the absorption of these buy orders, right? And then the market sells into it, right? And that's the flip here, right? But you have to see this interaction, right? I mean, we can go and look at an example of it now, like in live price, but, oh, well, not live price, but yeah. Where's a good example? Here's actually a perfect example. I think if that doesn't, yeah, right. So here, right, we see this selling range, right? The market creates a range, right, and initiates out at the bottom. So we know that there's sell orders remaining in there, right? Price comes back into that range, right? Absorbs all of these orders here, right? So the market absorbs all of these sell orders in this range, right? There's still obviously quite a few rest searches where we see quite an aggressive initiation down, right? But then, I mean, then you see it again, right? Like the market comes back into this range, right? Again, absorbs all these sell orders, right? That's why it moves down. And then it takes out the highs of the range, right? So then what we can theorize, right, is that price has absorbed all of the sell orders here, right? Whenever a sell order gets filled, we know a buy order has to enter the market, right? Because it's how orders work. You can't have one side without the other, right? And yeah, then we see, that's how we know there's a lot of buy orders in the market, because we've seen it absorb all of these sell orders, right? So to absorb all of these sell orders, there has to be a lot of buy orders. Price breaks the high, right? Which gives us the significant demand range, essentially, right? So here we could look at this in two ways, right? We can take the whole range, which is completely correct too, right? Or we can refine it to different POIs, right? Like we can say, okay, here's one range. So yeah, maybe this POI here, which breaks the range, right? And you can see that, cool, you potentially get a trade away from this, right? But the market wants to come back down to the extreme because it obviously needs more liquidity or something like that, right? But until this low is taken out, we know that we still have unmitigated buy orders here. Does that make sense? Going to assume that that's a yes. Yeah, cool, perfect, brilliant. All right, cool. Yeah. Anyone else got a note? Yeah. Any other questions, or is that like the only thing? Like if we, that's the only question, that's brilliant. We've covered it really well. But yeah. Yeah. Any other questions specifically about entries? Yeah, cool. 2 seconds. Oh, perfect. Cool. All right. Yeah, PC, whoever that is. Yeah, you should be able to unmute yourself, mate, and fire away with a question.
I would like to ask about the quality of the supply and demand zone. I think you already covered, but yeah, I might miss that Zoom. So if you don't mind.
What do you mean the quality? Like
which like yeah, go for it.
Like POI selection, yeah?
Yes.
That's what you're talking
yes.
about. Okay, well, POI selection, we're like generally looking at where's a nice example of a POI? Like yeah, to a degree, this is a great example, right? So what we're looking for is a few different things, right? There's the flow chart that covers it, right? But what we're looking at ideally is a POI that has that's visible on 15M, right? Like the price action is visible on 15M. The POI doesn't necessarily have to be valid on 15M, but the price action needs to be visible, right? Here we can see this large buy, right? That ends up breaking the low here, right? So here, this has instantly broken something here, right? So PA is visible on 15M, right? We know that the area has taken out liquidity, right? It's taken out this previous high here, right? So we know that when we see a run on liquidity, we see a large injection of the other side of the market come in, right? So fills loads of buy orders, loads of sell orders get filled, price continues down, right? It has broken something, so it breaks this, right? Has inducement, right? So it has a point of liquidity before it, right? And is in the premium and discount of something relevant, right? This is our, this would be our relevant range. Right? And it's in the premium of the range, right? And yeah, then we can go down and like what we can say here is, because what we really want for a valid POI is the fact that it's an engulfed sell to buy or buy to sell, right? So we can here go down and start searching for that handle and see what it is. Yeah, here we have one, but we still have this wick. Like, I'd be very interested in the top part of this wick. Essentially, I'd be guessing there's something in there. Might not be. It might just be a massive wick, but yeah. Normally, if the move is really valid, you will see something there. And all that has to be like relevant on the 15M, right? All of that stuff I just mentioned. Right now, I'd be looking at like this and this little thing here. Let's see if we can find it. I mean, that's just aggressive, but still very valid. What do we see there? Yeah, I'd probably be looking. Well, I'd like have this whole range basically, this buy to sell, and then I'd refine it. Like here, normally I wouldn't do this because it's not visible on 1M, so I'd be waiting for something more on 1M to do that. But yeah, just see if it comes into one of these things. Yeah, literally taps that to fucking perfection. If it continues on lower for now, whether it runs that high into the extreme, shouldn't run it now. No. Yeah. But yeah, that's what we're looking at, right? Like the more POI selection should be relatively straightforward because it should just have to do with like narrative, right? Like, am I expecting the market to go lower or higher? If I'm expecting it to be lower because price is bearish, where are the relevant POIs? Can I validate this according to these characteristics, right? Like, has it flipped something, right? Have I seen some form of interaction? Well, yeah, here this comes in and interacts with this, right? Moons and then drops straight through. So we can see all of the buy orders here absorbed and then a big sell-off, right? Price comes back into the extreme that's broken structure, right, and continues to move down. That extreme has run liquidity, it's got inducement. We see a corrective retrace to it and all of that sort of stuff. Does that make sense, mate? Cool, perfect. To validate a POI, the break of structural touch. For a 15M POI, yes. Like it's all time frame relevant, right? Like if you're looking for something on the 15M, that all the PA should be visible on the 15M. You shouldn't ever go down time frames to validate it, basically. I covered that a bit in the last Zoom, mate. Have a look through that one when Lewis posts it. Yeah, they're little buy stops are a bit tricky. Hold on, someone raised their hand quickly. Where is
Jimbo, raised his hand.
Yeah. Yeah, cool. Yeah, far away, brother. Oh, shit, what have I done there? Yeah, far away, Jimbo.
All right, thanks. Could we look on Thursday around New York, the 1 minute price action? There was like most of us were looking for longs at that time, and you said something. The 1 minute failed to take the high basically at the time that it came back, and it already mitigated the 2 minute range.
Over here, right?
Yeah, it was. Well,
Yeah.
yeah, exactly.
Okay, so yeah, if we look at this, right, this is where it's really important, right, that you go, okay, so what have we seen here, right? Well, we see this like smaller supply range, right? But you can tell, like, again, it's just looking at like significance stuff. This is a big range, right? This is like a big supply range. So we still, right, even though this has come in and tested here and given us a change of character, right, the important thing is to understand that we could, well, still be seeing, like, here's your lower high, right? If you're looking at this from like a structural point of view, that there is your lower high, right? This isn't really a lower high. This is a supply range, right? So until that lower high goes, right, price is still creating lower highs, right? So here, once we do this, right, so we get the change of character, cool, right? We can take a trade from there, yes, definitely, right? But here we see, right, like we have an extreme, yes. So we can, again, you can still take this trade, right? It's not like, I'm not saying this trade is wrong, but what I'm saying is here, probability would suggest that the fact that this, right, mitigated the range here, right, and failed to put in a high, right, that would suggest that this low is now weakened, right? Because they've absorbed some of the buy orders there and used that to create that push up, right? So what you have to understand is now that when price comes back down to here, you're trading from a weak low. Right? This low has failed to break structure, right? Because that would be our structural point there, right? Like this isn't a structural point. This is more of a supply point on 15M, right? The structural high is here. Like, I guess this would make more sense maybe on 1H or something potentially. Yeah, to a degree there. You can see you've got this POI here, right? So until that POI is fully taken out, right, we can still, like, you can take the trade here, right? That's fine. You need to like ask yourself, like, and that was a mistake I made on Friday too, right? Like a very important question to ask yourself whenever you get in a trade, right, is have I got in at a weak or strong area, right? Weak or strong, high or low, basically, right? If you've got in at a weak low, you can always take the hedge, right? Because
so just to clarify quickly, you don't care about this 1 minute high being taken or failed to be taken here. You really care about the larger 15 minutes.
Yeah, exactly. Yeah. Like until that high goes, we can still, you know, I mean, here, what does this mitigate? Here, I'd still potentially, like, if this high went, you could still see this as a run on liquidity in stream because it hasn't really mitigated the extreme. Do you see what I mean? Yeah. Like if until this high goes, this low is still weak, right? Basically. So even if, say we get in a trade here, cool, perfect, nice trade, right? I mean, here we've had Choch anyway, but yeah. Here we may see something like that, right? In which case it's good to cover this trade with that trade, right? Because you don't know which way it's going to go yet, right? Because price could, at this point, right now, what I'd be thinking is, okay, now we have a little bit of, a little bit of like an issue, right? Because now, technically we have an internal strong low basically, right? So now, generally speaking, any strong area, right, will get a reaction, right? Whether that reaction follows through or not, like here, right? On one end, this low is strong, right? That's why we get the reaction to it, right? But that reaction isn't enough to take out the 15M strong high, basically, right? So here, say we get this, right? And this distributes into here, right? We can still short that there, right? But again, now what we need to be thinking is, okay, cool. Well, now the market may, now the market may trade down to here and accumulate and do that, right? It's why ranges are so fucking difficult to trade, mate.
Yeah, that's super nice that we could talk about this, because the reason why I took the trade of this 1 minute level basically instead of the entire range is because I figured, okay, we came up like pretty impulsively, then we met some sell orders here, and yeah, this range basically, this large range basically wasn't able to break through all of this selling pressure or selling power, and then it just came back to the 1 minute refinement, and now we've done what we wanted to do from a demand standpoint or from a buying standpoint, and now we could maybe break it. That's why I still looked at it, but obviously it makes sense what you said.
Like here, fine to take this, right? Because this is the extreme, right? This low has created something. We do have a point of liquidity here, right? So this trade is still valid, right? You just have to understand here, right? That what, like, it's about understanding the two things that could happen, right? Cool. So yeah, we get charged there, right? There's your entry, right? Like in here somewhere. Right. So now, right? Cool. You're in a trade, right? But you need to be aware that on the bigger picture, like the bigger picture at the moment is that the market on 5M is doing this.
Yeah,
right?
perfect.
So take this trade, cool, right? No worries at all. It's a good trade, right? Market rallies nicely from it, right? Stalls a bit. Like as soon as it starts stalling, you want to be thinking, okay, let's just see what happens, right? Market rallies higher, comes into the supply zones, right? And then I'm guessing we see some form of distribution, right? Yeah, it runs to high of that range. Does it run that high there? Yeah, nice, runs that high there. Comes down, yeah, like I'd be hitting that here now straight away. Like as soon as it comes back to that, basically. So does it want anything within that range really? Whether it comes back or not, I don't know, but yeah. Right, because we've now seen that like now what you have to see is, okay, cool, right? I'm in a good trade, right? Like the long is good, right? But we're seeing the potential for shorts here as well because we have a lower high, right? This low, this high has created something. It's taken out this low, right? This low has not taken out this high yet. So if we see a change of character back from it, likely that low is going to be weak and will end up getting taken. Basically, which is exactly what we see. Or yeah, that's why you wait as well. But yeah.
Yeah, perfect. Thanks for going through this, man.
Yeah, no worries, brother. Cool. Yeah. Right. CW. Fire away, brother.
Yeah, hey, Sketchy. Can you hear
How you
me?
doing? I can hear you perfect.
Let me see if I can annotate quickly. Annotate text. Oh, shit, I can't. Yeah, so
All right, turn that off.
yeah, I'm trying to cut and paste because it'll save me rewriting this. Basically, I think it'll help others. Like I can kind of follow it a little bit, but it's like I don't really use it as a flow chart for entries. So basically, you basically got three options. You know, it's either going to be 15-minute chalk, 1 minute chalk, or 5-second chalk. So it's just looking at which ones apply in which circumstances. So you've got pro H4, pro 15, pro H4 counter 15, pro H4 counter 15, but when you're in the H4 level, counter H4 plus pro 15 and counter H4 plus counter 15. So it's just really going through all the scenarios and looking when it should be, which one applies. Just as
that's it. Like that's I mean, this would be a great thing for people to test, right? Is to just go, you know, like, all right, here, how would I have got into this trade? Why is this trade valid on 1M? Right? Why is it like, do you know what I mean? Do I need to wait up here for 15? Well, yes, you could. No, but you're going to miss a big down move. That's fine, right? You still get a lovely continuation from there. It takes a bit of time to, but it still does at 1 to 100, right? But yeah, like, but it's important to understand that, like, right now, right? Like you say, so basically, right? If let's try and draw this. Whether we can or not. Right. So say this is our 4-hour trend. Right. And let's say now this is our 15M trend within this. Right, and obviously this is best case scenario, the market not breaking anything it should, right? But yeah, it's understanding that you know, here, right? Because say we've got the H4 logo over here. Right here, right? Well, here, right, we're delivering bearishly, right, from a lower high, right? So we can trade shorts from like just from seconds here, right? Because we're just seeing that bearish price delivery, right? So everything is aligned, right? So reasonably, we don't need, like, if 15M hasn't changed order flow, right, then we don't need to see, like, we can just trade seconds charge, basically, right? Here is a little bit different, right? Because we've, like, here, if you're being aggressive here, right, these trades you can take on one end because you've just taken out a low, so likely you're going to get some form of a reaction, right? Whether that reaction continues higher or not is irrelevant, essentially. Like, likely the market will pull back a bit, right? So you can be aggressive there, right? Here, again, here you want to be a little bit more cautious, right? Like, here's time for, like, saying, okay, well, see what 15M order flow, like, if 15M order flow is bearish here, because we're counted to H4, you want to see 15M order flow go bullish, right? Here, these trades, again, you can be somewhat aggressive because you can always think, like, okay, well, maybe this supply range is the one that will continue lower, right? Oftentimes, the market will take out the first high in a POI, right? And create another one. Like, maybe that would be better like this, right? Because it will need to take out some form of liquidity, right? So the market will create liquidity within that POI, run that, and then give us something like this up here. And so, yeah, anything in here, right? Because this is the pullback, right? Anything in here you want to be a little bit more cautious of, right? Again, when we start doing this, anything here we can be aggressive with, right? Because the market's aligned correctly.
Yeah.
Yeah. Makes sense?
Yeah, so if you were to, I guess, let me just, I'll see if I can type it, text. So, OH4 plus, Pro 15, you'll be looking for 5 seconds entries. Yeah.
If everything is aligned, yes.
Yeah.
That's H4 order flow, H4 structure, 15M structure, 15M order flow.
And then Pro H4 plus counter 15.
Yeah, I mean, ideally, then the safest thing to do is, like, honestly, like, if all of you guys just stop taking a bunch of random entries, right, and you just trade when the market aligns, right, correctly, which it does, you know, at least 3-4 times a month, right, those trades are going to do 1 to 100, like, at least.
Yeah.
Right? Like, you just have to be patient with it at that point and not trade it like intraday, right? But yeah, like that, like, and if you're trading, always the safest option is if you're trading against 15M order flow, right? Wait till that order flow is in your favor, and then you can take longs, right? That's when it might be harder, like, from time to time, it's harder to find the POIs, right? Because price is a bit messy or whatever, right? But those trades are, like, when you're pro order flow, those are the high probability trades, basically.
Yeah.
So, like, here's a good example. Even here, this is a good example, right? Like, here we have bullish order flow, right? Then we create, like, bearish order flow here. We fuck around, we create bullish order flow here, we create bearish order flow again, right? Here, but then we create bullish order flow again, right? Oh, fuck off. So here we can take this as a continuation, right? Make sense?
Yeah.
Because we have everything aligned, right? We can see that if we're only like, if we disregard this swing structure to the left, here we're bullish M15, create M15 bullish order flow. Here we can take seconds entries down here, basically. If this does the correct things, because here, technically, right, this candle has taken out a low, right? So it's a sell to buy thing, right? So technically that is a demand range on 15M, but we can go lower and see if we can find the actual POI, which is relatively, no, it actually comes to that, yeah, it's not surprising it comes to that. I guess, yeah, there we go, there's POI. Right, so here we could just trade the seconds away from it. And what do we get? Well, here we get a Church no flip, right? So we need to wait for the flip. This doesn't come to anything, so this isn't our flip, right? So if we're looking here, we've had one Church, right? Cool. Market doesn't, we don't see interaction between buyers and sellers, right? Then the market takes out liquidity again. Right, so it gives us another supply range here. Well, this whole larger supply range, but yeah, then the market comes in, flips that. So there, in theory, would be, well, here or here, like either or would be your entry, or you could wait for another mitigation, which would be there. But I would guess you would stay in this potentially, or maybe not. If you're using a 1 pip stop, you'd be fucking. If you hit it perfectly, you might get lucky with that. But yeah, if you take the loss there, hey ho, market's initiated, you go here. Or you could wait until this whole larger range is taken out and then say, where's the flip to this larger range? Well, here. All right, market trades down, trades up, there's your entry. Right? Make sense?
Yeah. Yeah.
Yeah, because everything's aligned. Whereas, you know, like, if we're looking at trade like that, like a good example would be that trade we spoke about earlier, because that's unaligned, right? It's why it's always lower probability. Like unaligned trades are always lower probability. Anything CT to order flow, anything CT, anything is always lower probability.
Yeah.
Right, because you're then expecting something to happen. Make sense?
Yeah. Okay, cool.
Perfect. Yeah. All right. Cool. All right. Alex?
Yeah, hey guys. Let's say we got everything aligned, all time frame and all this stuff. And when we have a weak point of structure, for example, on 15 minutes, like, and we can start follow M1 ranges, yeah. And if we miss very first opportunity, very first trade from the edge, like, and what might our entry model looks like in this situation? I mean 5 seconds, 5 second entry model inside and one range, like all the same shit, yeah? Or
Yeah,
like reshape, interaction, and something like that.
Yeah. Exactly. It's always the same thing, mate. Like every single time. Like there's a couple of varying entries where, like, well, I mean, I've stopped using them as much as well, but you can use like sell or buy stocks in certain scenarios. I covered that a bit in the last Zoom that you can go over, but yeah. Yeah, it's always the same shit, man. Like every time we just want to see the market do the same thing.
Yeah.
Right. Come into a POI, whether, you know, like ask yourself, am I trading from a weak or a strong area? Cool. Okay, have I seen the correct time frame align at this point in time? Right. So say you're, I don't know, as an example, like say
here we got perfect examples, like what I mean, like, you know, they creating a lot of ranges and push price until we take this week 15 minutes. Yeah. And for example, right here, it's a V-shape interaction, and then basically we could like see.
Exactly. We'd be looking for this. Right, say this was on I wouldn't be trading this on the 5 seconds of continuation, but yeah, say we saw this come back into here on like 1M or something, then we'd be looking for like a little seconds time frame alignment.
Yeah.
right?
Yeah, great.
That's it. Yeah.
Yeah, great. Thank you.
Yeah, but then no worries, mate. Cool. Yeah, sick. Right, if it comes, guys, if you want to ask a question, just like raise your hand so we keep it like, because I'm not going to look at the chat box. So just raise your hand and we'll answer like that. It's much easier than having to go through the chat box the whole time. So yeah, anyone who's asked a question in the chat box, feel free to raise your hand and talk. Mr. Duffy, what is going on?
How's it going, mate?
All good, brother. How are you?
Yeah, not so bad, mate. Not so bad. So my question was, do you always wait for a flip and the chalk within a refined, say, within a refined 1 minute POI on the 5S? Do you always wait for a flip, or do you sometimes just go with chalk?
Normally, I try to wait for both, mate. Like it's always safer, you know,
Yeah.
like because here, right? Like here's a perfect example of it, right? This doesn't give us a flip, right? Look what happens. Low gets taken out. So you're trading from here, going, hey, look, here we go, right?
Yeah.
We've only had a charge, but yeah, now we've got low high, right? Getting here, wicket. Oh fuck, I got wicked out, right?
Yeah.
And then you'll see the market do this and actually give you a flip, and then surprise, surprise, where does the market go from? Goes from the flip point, right there.
Yeah. No, it does make total sense, doesn't it?
Yeah. It's just like, it's really, yeah, like it's just like, it's seeing like essentially what we're seeing, right? Like everyone, that's what I keep telling you, like when to think of it as orders, right? All we're seeing is orders delivered to a market, right? That's it. All we're seeing here, this is the formation of a buy order, right? A buy order needs, for us to validate a buy order, it needs to have that sequence of events, right? There needs to be, this is perfect. This is actually a textbook example, right? So we have a 1 MPOI over here, I would guess. That looks like the 1 MPOI, right? The last sell to buy, right? So what do we need to see to validate this buy order, right? Well, we need to see a liquidation, right? There's your liquidation. Right, and you got to like literally go over any fucking trade that really works, right? And it like this sequence of events will happen over and over and over again. Liquidation, right? Mitigation, right? SD flip, right? So that happens here or here. I mean, yeah. Here, and we've already seen a change of character here, right? But that change of character doesn't, you know, we can wait for this change of character too. I know here it's valid now, but this is where you need to say, okay, well, this extreme is valid here, right? And here I don't see the correct PA again because I don't get another flip here, right? I just get a clean push, so likely that's going to get taken out and used as liquidity and yeah, continue on from there, right?
Well, it makes sense. We look for it. We look for the flip on every other time frame. So why not seconds? Yeah.
Yeah, exactly, mate. Exactly.
Yeah.
Like it will stop you taking a bunch of losses.
Yeah.
You know, you might miss some trades because of it. Yeah, because sometimes the market does do that, right? And there are times that I will, yeah, I'll you know what I mean? Like I'll try and read it as it's happening, sort of thing. But yeah, I mean that's like, to be honest, mate. If you only ever took the entry models, the POIs, everything we always talk about, you take so few losses.
Yeah.
Right. And you follow structure correctly. You take less trades, yes. Right. But you would take a lot less losses as well. And I mean, that's the decision you have to make. You know, which do you want? Do you want more trades, less losses, more losses, or do you want less trades, less losses, all of that sort of stuff, you know? So it's completely up to you.
Yeah, man. Cool.
Okay, nice one. Cool. All right. Cyber Pyro. Should be able to unmute yourself, mate.
Hello?
Hello,
Can you hear
mate.
me?
I can hear you perfectly.
All
How
right,
you doing?
yeah. So I'm currently trading the reaction only for decisional and extreme And then I found on the flow chart that you mentioned that if the extreme has done something, I haven't seen any sample. Do you mind discussing when to take the extreme and decisional? So if for decision, I'm taking the reaction, so that's fine. But for the extreme, how would I know that it's not going back to the extreme instead of?
You don't.
Yeah.
You don't, mate. Yeah, you never know. It's that simple, mate. That's why we trade react. You never know. I cannot give you a concrete answer to that because I don't have it. You know, like we do not know what the market will do. To know that, you have to know every single participant in the market's motives at that time. Roughly $2 trillion a day goes through EU. It's an awful lot of fucking participants. Right? It's why we trade reaction. Like it's just, yeah. Like if at this point in time here, right? But like, yeah, I can say, right, an extreme has to do this, right? If an extreme does this, like if it gives a church, then it's a valid extreme, right? But there are many times, right, that you will see the market do like, you know, something more like this, right, and not have this change of character down here, right? And yeah, here we say the decisional is the valid level, right? But the market being the market, if it wants to, it can do that. You know, we don't know, mate. It's I can never give you a concrete answer to that. Like it's all, yeah, just trade the reactions. So always, like, if you're unsure, just trade a reaction. Do you know what I mean?
Yeah, that's what I've been doing now. Yeah.
Yeah, it's always better to me. You know, because then you're actually seeing price commit there, right? Like, that's the point. Yeah? That makes sense? Okay, I'm guessing that's yes. Yeah, cool. All right. Yeah. Any more for any more? Any other questions about entries? Oh, put your hand up again. Yeah, fire away, dude.
Just a follow-up with CW's question. So could you show me again the diagram for the 4-hour and then the 15-minute diagram to the right?
It's all of that stuff's in the PDF, brother.
Yeah.
Like in the PDF, there's like detailed diagrams of all of that stuff, man.
Yeah, my question there is, you said for the 4-hour pullback, you need to wait for the 15-minute change of character. But if trading the continuation, should we wait for the 15-minute chop?
Well, it depends what. So you mean like?
I think you have a diagram to the right side of this.
I know, I've deleted everything, mate.
I will delete that.
Yeah, so say we're doing this, right? This is 4H. And then say this is M15, right?
Yep.
You mean if we're trading like this trade here, right?
Yeah, that's a pullback. You wait for the
so this
character, right?
Yeah, so here you wait for the 15M change of character here, right? But then to trade the continuation from here depends whether, like in this case, right, the market hasn't had to go bearish on M15 to come back here. So no, we only need to wait for 1M, right? Say we do this, right? Then yes, we need to like it's more sensible to wait for that. You don't have to do anything. Do you know what I mean? Like a 1M entry here, they do work, right? But it's more sensible to wait for this, right? To wait for, okay, cool. I've seen bullish structure develop. I've seen bearish order flow develop. That bearish order flow has realigned 15M order flow with 4H structure and order flow, right? So now I ideally need to see a 15M change to bullish order flow to trade that continuation there.
Yep. And
right?
then Yep. Go ahead.
No, sorry, mate, go on.
Yeah. Yes. My question is, the next one is the continuation of the 4-hour leg.
What, up here, the continuation of that, you mean up here?
Yeah.
This trade up here?
Yeah. So it's like that. I think you need to wait for the 15-minute chop here to trade the continuation.
It's always safer, mate. Like that's all I'm gonna say is you don't have to wait. No, like if you want, you can trade this on seconds alone, right? If you want, but that's a decision you have to make. You know, like it is safer to wait for 15M to be in your favor. Yes, that's all I can say. You know, like, but that's the I've seen like I've caught trades like that are fucking worldies, like off the seconds. You know, but like they're not safe trades. Like it's a decision you have to make of, am I willing to take that risk? Is the payoff good enough? You know, like all of that sort of stuff.
Yeah.
Yeah, like if you want to take the highest probability trades, just don't trade against 15-minute order flow. Always wait for 15-minute order flow to be in your favor. Right, no matter what you're doing, if you've got 15M order flow in your favor, right, you should be all right to a degree. Like you won't take a lot of hits.
Yep.
Yeah.
And another question. So let's say this on this pullback. So there's a 15-minute breakup structure, and then do you wait for this break before you trade the short towards to this demand? And what will be your criteria to trade back to the demand? That's where I'm struggling because I might be trading the week high here.
Yeah, so if you've had a 15, like again, just wait for 15-minute order flow, mate. Like literally just wait for 15-minute order flow. Right, just don't trade against it, and that's what like you won't. Like here, right? If you're trading, how to describe this, right? Okay, say over here, right? Say we see something like right, 15M does this starts giving us high lows, right? We come up to here and we see a 15M charge, right? Then the net, and you're talking about this trade here, you may be trading from a weak high. Yes, you may be, right? Yep. What you need to look is what's happened here. What's this mitigated? If this is mitigated something significant, probably not worth trying to short that. Do you know what I mean? Because that may well just run through, right? Better at that point to wait for the market to put in another lower high and then see if you can get in on that lower high, right? Depending again on what it's mitigated to the left and all of that sort of stuff.
Yep. Is that at the 1 minute time frame or 15 minute?
1M, because it'd be entries,
1M,
right?
yeah. Yep. Okay.
Well, here it would be what's it done to the left on 15M, right? Are we seeing a 15M continuation? Are we seeing a 15M pullback to lower? Like if this level here is complete and utter shit, right? Likely that's just going to be a reaction point to come down to here, right? If that level is something good, then likely it could well continue on up. Yeah?
Yep. Cool.
Cool.
Thanks, Sam.
No worries, brother. Yeah. Salvatore, you should be able to unmute yourself, mate.
Hello.
Hello, mate. How are you?
Oh, I'm good, man. Everything okay?
I'm good, brother.
First of all, happy Sunday to everyone.
Happy Sunday.
Nice to be here. And I just want to ask you something kindly. Can you show me a clear choke and flip in a real chart in a 15-minute time?
Yeah, sure.
Please. Thank you very much.
Yeah, this is like a textbook choke and flip, right? So we see here a supply range created. There's your last point of supply, right? The market comes in, reacts to the supply level, and then fails to follow through. There's your touch and flip. Takes out this low, takes out the high. That's literally like if we, depending on what we do come Monday, right? No, I mean, now we put in a lower high here, so we'd be expecting some sort of a retrace. Then it comes down to like this level and this level, whether either of these want to give continuations. This one, I would guess, is potentially going to be liquidity for this one. And this one has equal lows, and we still have this whole unmitigated range here. So yeah, one thing I'd be like looking at on Monday is, I don't know, something like the market releases out of here, comes back down, gives us a bit of a reaction here, up to here, then comes down into here, trades, does that, something like that. That's one potential scenario for Monday, because that now we've got an unmitigated flip in the chart with liquidity here.
I don't know.
Yeah.
Excellent, man. Yeah, thank you.
No worries. Yeah, cool. All right.
Thanks, man.
No worries at all. Yeah, I hope that helps everyone a little bit and clears up a few misconceptions or whatever we want to call them. Yeah, limit, yeah, to a degree limit on extreme reaction. I mean, I just trade a reaction to anything, but yeah. Yeah, cool. Right. If that's everyone thingy, I'm gonna get going and go and I don't know, do something that's not on a chart. I'm not sure yet, mate. Might go up to London for New Year's. Yeah, cool, guys. Peace and love. Have a lovely day.
Thank you, man.
Yeah. Yeah, Lewis will upload it, mate. Not me. Lewis is the recorder. So yeah, if there's ever a problem with an upload, shout at Lewis. All right, he's an arsehole. But yeah, cool. Peace, guys. Bye.